The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, boys and girls. We're going to have Rich Anderson as our guest at the half hour, and hopefully if we can make the technical connection okay. I'm going to start out with gold and silver, but before we do that, we've had a request from Mr. Z in our trading loom to alert us to the pattern that we have going on in wheat right now. We have a situation where we're completing a butterfly on the 30-minute chart. The problem with this is the fact that we've had this really strong down move with these wide long bars that are our first danger sign, but we are holding right at the 1.27 level here at $4.83 a bushel. One of the ways to play this is that you could buy it at this 483 level and only risk about 5 cents, around $250. You become a farmer for $250, which isn't too bad. However, I wouldn't risk more than 5 cents on this because I think it has a higher probability to go down 10 more cents down to the $4.72 per bushel. We'll cover the other grains a little bit later in the show, but I did want to get to the gold and silver because those are the ones that, you know, we watch a whole lot here at TFNN, and I think it's important that we focus on those because they're just not able to rally, folks. And this is a very bad sign. And I've been bullish this stuff, and it's acted well for a while. It's actually made a little money, but it has never really gone anywhere. We came down to the 61% retracement down here around that $16 an ounce level in silver. And it hasn't rallied. We've been here for 2 weeks and nothing's happening. That's a bad sign, because usually when you hit a major bottom like we did in January, you'll notice on that silver chart when we hit that 61% retracement at $15.55 an ounce, we exploded out of there. We jumped $3 an ounce. We jumped $15,000 in a matter of 2 weeks. And yet on this pullback, we've been unable to, see any movement to the upside. Now, I don't know if the silver is waiting to get down to hit the exact 61% retracement at $16 an ounce, which it certainly could. But the fact is, I don't believe this bottom in silver is in. It just doesn't look like that's the way it wants to be. Unfortunately, that's it. If I put up the really long-term, chart here, hold on one second here. We will put this get this out of the way so you can see the really long-term one, what the silver looks like. It's still in a very strong downtrend, and yet it does have the potential, to have a little bottom here if we can hold this $16 an ounce. But any close below $15.80 per ounce in silver would be a very, very bad sign. In my opinion, that's the way that it looks to me. Now, the next one we're going to take a look at here is the gold, and I'll give you an example of the negativity that we're seeing here in gold, and that is over the last few days, every time we get anywhere close to the previous day's highs, we sell off. We did it today. We hit 1209, and the next high, the previous day that came in on 1204 on March 4th, came in at 1208. So it makes a higher high by $1 or less. And what does it do? It immediately drops $10 an ounce. So that's a lot of selling coming in, folks. You've got these lower highs to contend with, and also you've got a few higher lows in here, but they're very, very marginal at best. We've looked at this gold for a long, long time now. My major reason for being bullish is this weekly chart that I'm going to post in here. As you can see, that we did hit that 61% retracement from the low in 2008. We made it with a really nice butterfly pattern. We then rallied all the way up to $1,300 an ounce, which was a 786 retracement of the high in March and a 61% retracement from the high in December of 2013. And so that tells us that this market is still in a downtrend, but we really need to turn. Folks, if we ever get it above $1,300 an ounce now, go long, because gold has a chance to really get up there if it can hold this level and turn. But we need it to get above $1,312 an ounce, and then I would say all bets are off and just start piling it on. That's really what you want to remember. Regarding the gold, I had a phone call yesterday from an old Drexel client that I hadn't talked to for quite a while, and he reminded me of I used to deliver Cougarans to him. That's what gold, back in those days, back in the late 70s, you could buy gold. It was basically Cougarans and maple leafs and 50 peso coins and some British sovereigns and what were the other ones? The Austrian the Austrian kronas were the ones that were the most popular, and we would buy these. The customers would buy them for us, and we would deliver them to them. And this was, back in the old days when they did stuff like this. And, because I was carrying anywhere between $10,000 and $100,000 at any one time, I know you're going to think I'm nuts, but this is the truth. I carried a 9mm Model 59 Smith & Wesson. And I don't know why I did it. I was stupid to do that because I was figuring I was protecting myself. I never ran into any danger, anytime, anywhere, but I carried this. And Jerry reminded me of that because anyway, I was thinking how silly I was. Of course, I was a lot younger then, but anyway, those were the old days. But anyway, we need to get this gold above $1,300, or if we break below 1170, we're going to be going down to triple digits again, down to the 950 or lower in the gold is my guess. Back in the old days, if this were looking at news and quantitative easing and printing all this money, gold would be trading at 3,800. I really believe that, because every time the money supply would come out, the gold would rally $30, $40 an ounce. But these are different times, I guess, so we'll have to wait and see. It looks like it still has a chance, but it's giving a little bit of a problem. If we go and take a look at the XAU, which is the gold silver index that we follow quite a bit, we're seeing the same type of thing happening here. We've had a pretty good sell-off here over the past few days. Not a great deal, but enough to be a little bit scary. And as you can see here, let's just put the numbers up so we can look at it just a little bit better. I'm going to do the daily chart first just to show you where we are in the process, because we need to get down just a little bit more here at the 61% retracement in this XAU, and then we would have a pretty good chance of taking a long position in the XAU. The good part about this is that it's had a very orderly pullback in the XAU during the first part of the year, during January and February. This is the same type of an orderly pullback that we had during November, December of last year, when we went down to 63 and then we went back up to 83. So these corrections are very, very close. I still haven't given up the ghost in the gold and silver, but I'm a little disappointed, that they're not exploding to the upside. All that means to me is the cycle that I've been looking at is not the one that I should be looking at. So I keep looking. And as long as silver can hold this $16 an ounce level and gold can hold the 1170 level, then we've still got a chance for a good move in the gold market. I know it's contra to what I teach. In other words, trade what you see, not what you think. But boy, my bones are telling me that that something is coming, and well, we know that for sure. But I just have a feeling that this gold is getting ready to come out of here. I don't know why, but I don't know what it is, but we'll have to wait and see, what's happening with it. So we'll have to wait and see. If you have any questions, it's 877-927-6648, and we'll be happy to answer them for you. Okay, the next part of the complex that I wanted to look at is the oil complex, because we've had a pretty good rally here in the oil market. Here again, we've done the same thing that we've done in the gold market. We've had a nice little 61% retracement today, coming off of the highs from back on February the 17th, 2 weeks ago. And so this should be some strong resistance here at $52.50 per barrel. If we should get the oil above $55 a barrel, then we'll be looking at $65 a barrel. But that won't happen overnight. So we'll keep an eye on this to see what's going on. The bottom that we had in the oil market was not that difficult to spot, folks, because if you remember here, we were watching the complex itself. We were watching the gold, the silver, and the gasoline. Golly, hold on, Larry. We were watching crude oil, heating oil, and the gasoline futures, and we were seeing big divergences in here. In the gasoline, of course, we had the big divergence, and we've rallied well over 60 cents a gallon in gasoline, as you can see from your pumps when you go to buy your gasoline. You're noticing that you're paying a whole lot more for it than you were before. Next one I wanted to show you was the heating oil, because that was the one that I thought was the best indicator of what we were doing in the complex, because of the fact that it had held the 1 second, please. And I want to get this weekly chart up, because that's the one that shows it the best, because it hit the exact 786 on the weekly crude oil chart. And excuse me, let's try that heating oil chart, and then we will take a look at it here. Okay, there we go. All right, there we are. Okay, that's basically what we're looking at now in the oil complex. It held up. It's had a good rally, and we are due for a little bit of correction. And we want to watch this correction very, very closely, because I think, we're going to get a chance to buy oil probably back around the $47 level. And if we can do it with a nice little ABCD pattern, that's the ideal situation for what we want to be watching. Now, let's get back to the stock market for just a little bit, because I really enjoyed Basil's talk about the VIX and also the overall stock market. And we are at the proverbial moment of truth in this VIX index. We've had this large ABCD pattern complete since the middle of December. That came in pretty much on the low of the day this past week. So we should be ready to have a rally, but there's virtually, absolutely 100% no fear in the market, boys and girls. There just isn't any. We're going to pay a few bills here right now. 877-927-6648. We've got the Dow up and gold down.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted into Tiger TV the chart for the soybean market. And it shows the downtrend that we've had, but it's very interesting because if you look at this downtrending channel that we have, you'll notice that it is very, very important because it hits these numbers on the downside, 1.27, and it hits the 618 and 786 on the upside. So that's, that's how channels are formed. And we made a top in beans just recently up here at this 1035 level, and now we're trading about 50 cents a bushel under that. Now, today and tomorrow, and we have a P-index dates. Our good friend Steve Rhodes here at TFNN alerted me to that again. I don't cover that too often in here because I don't want to get too involved with the astrology part, but these are the most important, one of the most important things that we have. A P-index date is basically, it's a Pesavento index date. It was actually developed by my mentor, Dr. Ruth Miller, when I was starting to write the book back in 1986, Astro Cycles, A Trader's Viewpoint. In 1987, after the book came out, my good friend Frank Tauscher, Super Trader's Almanac, he absolutely loved that index. He lived and died by it for many years. He passed away in 2001. in Tulsa, Oklahoma. But basically what it means is there's a great number of planets coming in together at one time. It's like if you were in a bowling alley, all the pins would be lining up in a row. That's basically what a P index means. Now we also have basically, if you have a bell-shaped curve, if you go more than 15 planets coming together, that's a second standard deviation. And if you go 3 or less, that's also 2 standard deviations. So what we're looking for is standard deviations away from the mean, and this is what we have today. Tomorrow we have 15s, and then on Sunday we have a 16, which you almost never see that. But the reason why is that they've added some of these. They're actually giant asteroids, I guess, Chiron and some of these others that are put in the ephemeris that gets the level up to 16. But even with that, it still makes the number about 14. So sometime between now and Monday, the proverbial you-know-what is going to hit the fan. And since the market is on its way up, that usually means it's going to reverse. Frank Tauscher thought that this was one of the best timing indicators that he'd ever seen. He talked about it all the time. And it does work very well, so we want to keep an eye on that. Not only that, but we're right over the full moon right now, and the full moon is at apogee, where we have the Earth as far away as it gets from the moon. So something big is getting ready to happen in the market. Whether this is going to happen or not, I don't know. I looked at the chart that Basil posted on the biotech index, and it gapped way up today. Left a huge breakaway gap to the upside. Now, if that index should happen to close near the low of the day, that would leave a shooting star pattern, which is the most bearish of all candlestick patterns. This is the pattern that we had in Apple back when it hit 133. If you'll remember, we posted several charts weekly and daily about Apple and all the targets that were up there, the 2 ABCD patterns, the butterfly pattern, the 3 drive pattern. All of those were coming together in Apple up in that 128 to 132, 133 levels. So that's another indication that the most popular stock in the world is making a major top also. And believe me, it doesn't have anybody that believes this stock can go down, just like it did at 700. There was no one that thought the stock could drop. And 10 years from now, the stock will be probably trading at $3,000 a share. I don't know. But all I know is from the pattern of where it is right now, it should have a pretty doggone good correction, is the way that it looks like from watching it at this point. I posted the chart of the New York Stock Exchange Index in here, and as you can see, we made our high last week. We did make new highs in the number of advancing issues versus declining issue, new highs to new lows. So that looks still pretty good. But if you look at the index for the Dow Jones Transportations and the Dow Jones Utilities, they are breaking down. The utility index is already in a bear market. So we want to watch that Dow theory too also, because that could be, quite important. We're going to have Rich Anderson of Anderson Capital Management on at the break. If you want to call in, it's 877-927-6648. He's going to give us a little recap of the cattle market. So he'll be on in a few minutes. So we'll be back right after these words.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and I believe we have our compadre Rich Anderson from Anderson Capital Management on. Rich, are you there?
You bet. Can you hear me, Larry?
Absolutely. This is better than a regular phone connection.
Pretty cool.
Skype is really a wonderful product. I started using it, oh my God, it's been 8 years ago. Tom O'Brien got me on to use it, and boy, I tell you, it lets you talk to people all over the world, just better than the phone, and it's, pretty much free, so it's really good. Rich, let's talk about the cattle market. We had a pretty good break, and now we're rallying back a little bit. What's the state of the market right now?
Well, the cash market, it's kind of a two-tier market. You have the cash market, and last week on Friday, the February's went off the board. And if you remember, I sent you an email Wednesday saying that your projection for a low you had on the cattle was like 147, 148, and that we were already there. It was just in the April contract, and of course, April's gone up since then. It's 154, and with cash at 159 to 162. A little traded 159 up north, and I might have to go to 61 or 2 down south. April and cash will eventually come together in the month of March. We're in the middle of the Goldman roll right now, where Goldman sells their April and buys June. But because, as you pointed out last fall, the open interest has gone down in cattle, as it has in a lot of commodities, there's not as much to do in the golden roll, and that's why you'll see today the April cattle are up 5 and the Junes are down 57. And that trend will probably continue as April goes to try and meet cash. The February-April differential went to over $12 difference, and this is at 8.25. So I think that's one of the more interesting things on the board right now.
Okay, now we've had a question from one of our listeners about the soybean market. What's your feeling on what we're looking at here?
Well, we have this tremendous amount of supply, both in the U.S. and in South America. You saw a rally into last Friday on the truck strike down in Brazil, where the farmers had basically just put their trucks in the middle of the road to block it so people couldn't move grain to the ports, protesting taxes and the high fuel costs and all that. They worked on breaking that truck strike over the weekend. But the bottom line is, once Brazil starts to really ship this soybeans out of South America to China and all these other markets, our sales are going to drop down to nil. Last year, our sales continued for maybe an extra month or so because of port congestion. This year, they don't have that problem. They just have the truckers that are mad right at the moment. And I think we have to go cheaper until we find something like weather that may change things. The USDA Ag Forum, they talked about planting almost 4 million acres less in the United States this year. Seeing is believing. We'll wait until April or May to find out if they know what they're talking about. There's a lot of doubting Thomases out there that don't really think that that will be the case.
Okay, Rich, I had Byron on the show yesterday, and we talked a little bit about this quantitative easing, that everybody's talked about, and everybody seems to have a different opinion of what it means and how it's going to work. You've been around the markets for a very long time, and you talk to some really smart people. Do you have any feedback for our listeners of what your overall take is of quantitative easing?
Well, it's like you add an extra $1 trillion, which is they're going to do more than that in Europe, to the market. In this case, mostly the stock market. The Stoxx 50 is probably the best representation of that. We got more dollars chasing the same amount of stocks, it's going to go up. Just like in this country, over the last couple of years, it's been financial engineering, where they buy back shares of their stock, which makes their price higher.
Yeah, Byron talked about that yesterday, that there was something like $107 billion worth of stocks repurchased by the CEOs and stuff, and basically that increases their pay because they get stock options and stuff like that. So it's a really good deal for them, and also a good deal for the stockholders. But it's sometime it's got to come to an end, Rich, because you just can't keep extending credit forever. At least you never have been. Is it really different this time?
Well, it's not different. It's just it's going to take a while. 40% of the developed world now has negative interest rates. Now, the big knock against gold was that there was no dividend. It actually cost money to store gold, but now you've got negative interest rates in 40% of the countries, and at some point they'll decide the stocks are too high. Maybe we should go to something else, and it's just a matter of time before that something else comes back into the commodities. Now, the other thing I didn't mention about the soybeans, and this would be true of any commodity in the United States, as you see the euro's gone down today, and some people are talking about another 20% in the next year going down, maybe reaching parity with the dollar. As the dollar gets stronger, that makes our stuff more expensive, therefore less competitive in the world market. We sold some wheat this last week to Egypt, and the only reason we sold it is because we were financing the deal. Otherwise, our price was above the world market. That's why you see recently here in the last couple of days, the wheat prices have come down to kind of meet that world market.
Okay, that sounds certainly a good description of what we're looking at here. Any of the other grains that interest you? I mean, we had a huge supply of corn coming into the market, and also wheat. I mean, wheat is making new lows as we speak, and the that's telling us that it looks like we got further to go on the downside on some of these.
Yeah, well, we have this huge stocks, and we do have further to go. The only question is, and this has been my observation over all my years in the business, which, you know, growing up on a farm, is pretty much all my whole life. Once you start putting money in the ground as a farmer, you know, planting, fertilizer, the prices always seem to have that little uplift to them because there's uncertainty about, you've just put all this money in the ground, is it going to grow? In Minnesota, where I'm from, we haven't had any really measurable snow since the first of the year. Now, there's been a lot of snow in Chicago, a lot of snow in New York, Buffalo, you know, you name it. But our particular part of the country, we haven't, you know, and snow is moisture. If 10, 12 inches of snow equals an inch of moisture, roughly, depending on the type of snow it is, you know, how wet it is. But there's bound to be some crop problems someplace, and those crop problems are likely to cause some decent volatility. And so you expect during the summer that weather concerns will put a 10 or 15% price premium in at some point in the next 60 days. But
yeah,
we likely go down into middle of the month first.
And we're getting almost ready for planting, you know, corn and stuff here in, you know, mid of April, I guess, right? So
right.
That'll be the start. We've never had a year, Rich, where we haven't had some type of a growing condition, right?
Not to my best of my recollection. We've had some almost perfect years, but there's always, you know, 4 or 5 week period of time where you're concerned. And the other thing I'll add is that if the acres are down, then that's kind of a friendly thing for this year, but we have to wait and see. Number two, the farmer is going to plant using less fertilizer in corn because fertilizer prices haven't come down like the crude oil prices have. And they'll when you buy a bag of corn, you can have drought resistance is like the 4th or 5th thing that they can add to that kernel of corn in their breeding. But those bags of corn cost over $400 a bushel, and so these farmers are going to buy less genetically modified seed this year that doesn't have as much protection. And so the yields may not be quite as good come fall, but I mean, that's nothing. That's just for the back of your brain, not for right now.
Rich, when Sarah and I went to California to visit my grandson, we took our usual route over Cachuma Pass there at Santa Barbara. And we went to Cachuma Lake, and when I got to the edge of the lake, I hadn't been there in a year when it was bad, but Rich, when I got there this time, I almost had tears in my eyes. We pulled off on Vista Point, you know, overlooking where Michael Jackson's Neverland is, and where the lake used to spread out for miles and miles. It is flat out empty, Rich. There's not, I don't even think they got enough water in that boat, in that lake now to float a rowboat. It's so empty. It's really sad. It must be 50 feet under the water line, and it's just empty. I mean, this giant lake that was here, you know, it stretches for 8 miles, and there's just no water in it. It's really a shock when you see it and haven't seen it for you know, several years, you know, closely. It just really blows you away.
Well, what's happened is the concentration of the population on both the east and west coast is so dense, and we really don't have the moisture to, you know, allow people to water lawns and then, you know, still use it for human consumption. I mean, there's going to have to be dramatic changes in the next 10 to 15 years on both coasts, and not just the west coast, but the east coast too, because of the high concentration of population.
You know, maybe one of our listeners in the TFNN just let us ask a little question. So why doesn't the Federal Reserve print more water? That'd be a good thing if they could do that. But, you know, that might be interesting. Remember in '88, Rich, when you used to come out to visit me in Pismo Beach, the lake was really, really low at that time. I mean, it's like, you know, 50% of what it is now. But you said, as we were driving back to the airport, you said that lake will fill up next year. And flat out, we had the huge floods in '89, and you were absolutely right. That lake was overflowing a year later. But boy, it is. If you saw it, Rich, in fact, you probably ought to go online and look at it, Cachuma Lake, you know, in Santa Barbara County, because it shows the thing, and it's just just really, they really have a major drought there. And Santa Barbara is a huge city of 250,000 people, and many movie stars live there. So it's really amazing how much water has left the area.
Yeah, it's only going to get worse because of the population. Yeah. I mean, look at the Grand Canyon and the river that runs through the Grand Canyon.
Colorado.
The decision to how much allocate water to each of the states, that goes back to like 1935, and look at how some of these states have changed. Arizona, Nevada.
Yeah.
It makes no sense.
Yeah, it really does. What is your feeling on the gold and silver markets, Rich?
Well, I gotta believe when you print money, it's just a matter of time before they get up and go.
That's I was just talking to the folks about this before you came on the air. Is it back in the old days, Rich, if we would have had these types of fundamentals, gold would be trading at $3,800 and silver would be $50 to $100 an ounce back in the old days. But maybe it's different this time. But I still, when I look at my silver and gold coins, I said, I'm going to stick with you, boys, because you've kept me in the dance this long. So why not do it? So I still like gold and silver. But boy, it's frustrating when they don't get going when they should be going. So we'll have to give them a little bit more time. But if we get that gold below 1140, boy, it looks like it's going to have triple digits, somewhere in the 900 level per ounce without any trouble if it can do that. And look what happened to crude oil. I mean, not many people thought crude oil would ever get below $80 a barrel, and we got below 50 all the way down to 43. But since we're talking about oil, do you get any feedback of what's going on in the oil market?
Well, the problem in the oil market is that our production, we're about 1 million barrels a day overproduction versus what we use in this country. Now we'll cut back on some of the imports, but the oil kind of goes to the middle of the country, gets trucked and pipelined to Cushing, Oklahoma. That's kind of the hub. That's what they call it, as the hub. And all the tanks are getting full. And when the tanks are full, you still got to, and the pipeline's still flowing it in, you gotta sell it. And the only way you sell it is by a drastically reduced price. So frankly, I think the smart thing to do if I were the president or somebody is start to refill the strategic oil reserves, with these cheap prices versus, the last time we sold oil off was, during the Clinton administration, and it was like at $25 a barrel. Well, let's, replenish it, rather than the last time they bought some was over 100 plus. Let's replenish it when it's low, and that would help stabilize and give us a place to put it. But the bottom line is our things are getting full. There's been huge cutbacks in drilling and exploration, but they can be turned on in 60 days. They could be turned back on. Once we're full, and then it's got to go someplace. And unless the government says we're going to start buying back X amount of oil, I think the price is going to have to go quite a bit lower to clear the inventory. That's, it's like a river. The oil is just flowing downhill, and it's being used up or stored. But once the storage is full, it's got to be sold, and it'll only be sold at a discounted price.
Sure, that's so it was so oversold it had to bounce. Well, it didn't have to, but it did bounce a little bit. But we'll wait and see if that happens. Rich, I know you're really busy, but we wanted to thank you for coming on, and hope we'll have you on in a couple of weeks. Anything we should be looking for on reports on the commodity front that we've got going on this next few days or next week?
No, I don't see anything that I think will have any material effect to any of the markets. The dollar, though, that's. Every time it goes up, that makes our other stuff more expensive, so it has to come down to adjust.
All right, buddy. Thanks a lot for calling in.
All right. Trade well. Bye-bye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks. While we were talking to Rich, our good friend Steve Rhodes here at TFNN posted a really interesting chart on the New York Stock Exchange Index going over the last few months. What I did when Rich hung up, I tried to reproduce that chart and post it into Tiger TV so you could take a look at it. Basically, what it does is it shows you over the past 5 or 6 months these 4 divergences that we've had going on with the market, and it's really amazing to see that it's happening again. Whether these all these P-index dates that we have going on right now, it's really quite amazing to see if this is going to happen. But we have a lot happening between now and also Sunday. We've got the market in a incredibly vulnerable area for a correction, in my opinion, and we will see if that is going to be the case or not. But right now, that's the way it looks from my perspective. The market went into new highs this week. It didn't follow through. And that's not a good sign. One of the things that I would watch, I know you folks are high-tech folks, and if you watch that biotech index, you know, it has the potential to have a shooting star pattern. And that pattern would happen is if we close in the lower part of the range. And the lower part of the range means you've got to be in the lower 25% of the range today in the IBB. And if that happens, you will be looking at something that would be quite bearish from a candlestick perspective. And those of you that follow candlesticks know that those are the ones that you know, really are the best to do it. Right now, it is at about the 50% level from the gap that we had. We need it, if it can close below about a point from where it is right now. Let me post this in here to let you show you what it looks like here, because if it does it, let's, something didn't work right. Just 1 second here. There we go. This should be okay now. Give me 1 second here. There we, that's not working either. Yeah, there we go. I hope it, oh dear, just a second. Just a second. Here we go. All right, now we see it on a 5-minute. And if we take a look at this on the daily, you'll see what it, oh boy, whoa, we got trouble in River City, boys and girls. Take a look at this IBB with this shooting star, potential shooting star that we have going on with that big gap up and closing in the, if we close below 344.53, that's $1 from where we are now. That stock is going to have made a major high. That is a very, very powerful pattern. It's the opposite of what happened on February the 5th when we had the hammer pattern, which is the opposite of the shooting star. And that would be one that I would really be watching. So watch the price, 344.53. If we close below that, then that would be a really bad sign. That would be a shooting star, the most bearish of all of the candlestick patterns, and that would really be a very negative thing to have happened, at least looking at it that way. We don't have anything coming as far as helping us with the open interest with the gold and silver. Someone just asked that question. It's just been dissipating. The people have been leaving the markets in the commodity markets for quite some time now, and it's not any, you know, it's not a big surprise, because one of the things that I talked about earlier this week was the way inflation was doing, and I'll put this in here to let you folks take a look at it again, because it's basically showing you that we don't have any inflation, that the things are just going lower and lower. So that's it, boys and girls. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.